a lot of times agency owners will come to us and say, here's what I think I'm worth. And we say, well, you're not. I mean, you're not going to get that. If that's the case, if we can't manage that expectation and say, okay, here's the valuation and here's the structure of your deal, is that what you're looking for? If it's not, we'll say, let's not do it now. Wait. Or if you're growing too fast, well, let's try and capture that in the structure of a deal. But we'll do that for you, which is another part, the next step.
Welcome to Insurance Shoptalk. This is the podcast where the world of commercial insurance gets a little closer to home. I'm your host, Eric Stein, and in every episode, we're taking a deep dive into the insurance industry, from the latest news and trends to in-depth interviews with insurtech experts, carriers, and agency newsmakers. We're covering it all. So sit back, tune in, and let's start the conversation. All right, everyone. We've got Steven Nigro here with Tag Financial. He's one of the managing partner of the firm. Steve and I have known each other quite a while. He actually helped me with my transaction at Insured Solutions. Steve, thanks for coming on.
Well, it's great to be here.
Appreciate it.
Always with you.
Absolutely. Steve is in sunny Miami. I'm really jealous right now. 80 degrees, 78 degrees right now.
Yeah, no, I think we're at 78, 79 degrees. Yeah, I haven't been outside because I'm working hard. I had to say that, because
you got the coat on, so it looks like it.
Yeah, in Miami.
Oh, by the way, I'm coming down again next week for my birthday weekend, so I may text you again and see.
I'll be here. We got, I told you that we need drinking buddies down here.
That's right.
I'm
like 501. Last time I hit you for 501, I thought that would get you, and it didn't work. But anyway.
Yeah. I'll tell you. Sometimes I love the 5:30 to 7 shift. Right. So when I'm in New York, all clients that come to New York, they want to go out for cocktails. Now, some of them want to go out to dinner. I try not to do that because dinner has no end value. I mean, no, you're not going to another meeting.
Right.
You go to 5:30 and you do the cocktail hour. You could say, hey, listen, I've got to go at 7 o'clock. Down here, it doesn't exist. I have to build it. 2 blocks in any direction in Manhattan. You go in, there's bankers, lawyers, accountants, and their clients, and everybody wants to do that. Not so much down here. Maybe I'll have to start a club, Steven's Cocktail Club.
Oh, I like it. It's already got to read Stevens. Yeah, Stevens.
Yeah. So
that sounds good.
You're the first member when you come back down.
Oh, yes, founding member.
We'll have our first members meeting.
And we got to definitely find someone that'll do the whole bottle of scotch with the ice and the glass.
Yeah. Oh, you remember.
Oh, I'll never forget it.
Oh, that's funny. Yeah. Well, I'm a good drinker. Don't spread that around.
No. It's just all insurance. We're all in insurance. I mean, you can do it. That's it, though. You can't do it during the day, in the morning. None of that.
Yeah. That's right. Well,
so Steve, I want to have you on because as you know, I had Curtis Barton on with Alchemy and Aggregator to talk through an agency that might be looking to sell at some point or currently. And that's one model. There's business brokers, another model. You are a total different model in that you're an investment banker and have other resources. So I thought it'd be good to get you on because of course you did a phenomenal job on my transaction, helping me get top dollar and just advising me all the way through. You beat me up a little bit during the end, to make me finish the deal, right? Yeah. It worked out great. And so, why don't you talk a little bit about sort of your professional background, how you became involved as the managing partner, creating your own firm, and then, we can run into what you can do to help owners who are considering, selling.
You bet. Talking about me, that's my favorite subject, actually. So, but just career-wise, the first 16 years of my career, this is unbelievable that I've been working for 43 years or something now, right?
You look great. You look young.
That's because I drink. All right. So the first 16 years, I went from public accounting with Ernst & Young. It was Arthur Young back then, through a Wall Street stint where I was a CFO of a trading firm and merchant bank, and then went into the insurance industry. My ex-brother-in-law was the founder of Tower Insurance Company, and he needed a CFO. I did not want to go into the insurance business. A headhunter told me, if you go one street from Wall Street to John Street, the gate will close and you'll be stuck in the insurance industry. And funny enough, the first day of work, I went down to China Chalet. That was like Lloyd's of London. and on John Street, everybody went there, congregated there. Met the CFO of another carrier, and he was having lunch. We had lunch, we went back. I asked the general counsel that night, where do we go out for a drink around here? He said, right back down to China Chalet. It's a good bar scene. I go down, I bump into the same CFO. And I said to him, oh, you came back too. And he said, came back. The guy was there since lunch. So now, not only did the gate close, but I was with a bunch of, alcoholics and miserable. I wouldn't even call Tower an insurance company. I called it a financial services company. But over time, I learned to fall in love with the industry, still in love with it. And that's because, back then, Tower had done something very interesting, which is apropos and relative to what's going on these days. Tower spun off, I used to call it unbundling, spun off their back office, created an MGA and a TPA, and then used fronting carriers that reinsured through American Re at the time and retroceded back into our carrier to keep us honest. And the model worked. We grew. One day we were writing flower shops in Harlem, and the next day we were writing Bobby Van's restaurant on Park Avenue because we had a rate paper, and we grew exponentially. So being a CFO of that company, I really had to, put in internal controls and do all the things CFO does because it was a family business. And if I screwed it up, I couldn't go to a wedding or a funeral. But after that, I wanted to go back to Wall Street, but I wanted to do it with my new love of insurance. And I went to work for Hales and Company, opened their New York office in 1998. So the first 16 years, that was the first 16 years. I've been doing that for another 26, right? The same thing where Hales was mostly agents and brokers. I was doing that plus a carrier business. I knew the carrier world, so I could bring in the bigger deals, the balance sheet deals, and work on those as well. And I've probably been doing the same thing ever since. And I'll get to our current form, but M&A and capital raising for the insurance industry. Right now and probably all the way through, that means mergers and acquisitions and capital raising for agents and brokers, wholesalers, MGAs, carriers, reinsurers, captives, and service companies in accident, health, life, and property and casualty. So that's everything insurance. Now, the core of our business, and I'll talk about TAG now, is that agents and brokers world. There are a ton of transactions get done in the space. It is, I always say that if I had a retail agency, I'm almost indifferent between that and a government bond. They're both as liquid. It's a very, very liquid marketplace, and a lot happens for it. So that is our core business. Then going right up the chain, the value chain, wholesales, MGAs, and then the balance sheet side, the risk-bearing entities as well. And we'll do everything from raise capital and or M&A transactions, both on the buy side and the sell side. On the buy side, when speaking of Alchemy, great company, by the way, they're a client of ours. We do due diligence. We have a separate arm of 6 professionals that do due diligence for the panel of largest 12 or 13 active buyers. Alchemy happens to be a client. And that we do about 70 of those a year. It's a good business in that, as a business owner, it's recurring income, but that's not it. It's really the transparency we get from seeing the quality of sellers, buyer appetites, valuations, structures, who gets done, who doesn't get done, and so on. So it's a really good business. We have 17 other professionals, although, that's 23. I can only count 22. So I hope we're paying somebody. My partner said we have 23. I can only count 22. But I'm sure they'll complain. The other 17 are bankers who are working M&A and capital raising. And I'm going to put a pin in that for a second because there's an interesting dynamic going on in the marketplace, which is, but anyway, I'll get back to that. We're in New York, Miami, me here in Miami, except in the winter when people rotate through. I split my time between New York City and Miami, and we have a Dallas office, actually, at South Lake, Texas. You know, this group that I've been lucky enough to be part of, I think we did, I don't know, I'll take credit for it. I think it might have happened accidentally, but it's probably the closest knit, most collaborative group of professionals that I've worked with. So, it's pretty interesting. As for the pin that I put in that, and then
Yeah.
I'll pause just in case, to make sure you're still there. The In the last 18 months, what we're seeing is people come to us and ask for us to quarterback an initiative that's not M&A and not capital raising. And it's form a captive, help me get into the United States, help me carve out a piece of my retail book and create a program, introduce me to carriers, or carriers saying, introduce me to distribution, take my InsurTech product and introduce it to your clients and see if they will use it. And you know, this is new. We did it once in where we acted as a broker. We had an insurance carrier come to us that they were workers' comp only, wanted to form a general liability program, and they needed an A- rating to be commercial. And I said, what? They said, raise capital for us, and we'll get the A- rating. I said, how long do you think it's going to take? And they said, now about a year after we raised the capital. I said, you're probably up by 5. I said, but I have a new idea for you. We just completed a transaction creating a fronting company called Clearblue. And why don't you put your carrier behind Clearblue and your MGA in front of it, start the program, and when you get your rating, you'll wean yourself off of the fronting arrangement. Well, that was 2017, I believe. And they are over $100 million. They were in business in 60 days. So we sort of solved that problem. Here's the good news. We charged, as a broker, a percentage of the premium for 3 years. I pissed off the CEO one time. I said, you know, the hardest part of that is I have to, when you pay us, I have to unstaple your check from the back up. And he said, you're such a dick. We wire you the money. You know, I go, oh yeah, that's it. Right. Okay. So that lay dormant for a while. But we would try and do things to help our clients out. But in the last 18 months, we've seen an inflow of this type of advisory service, helping agents and brokers do other things. And my guess, and I think it's a good one, is that the reason for that is what's happening in the industry where the value chain of insurance from insured to reinsurance. I used to call that the continuum of the insurance continuum until I realized I can't spell continuum. Who puts the U's together like that? So the value chain used to be very sequential. Agents, you know, insurance went to agents, and agents might have gone to wholesalers or carriers, and wholesalers went to carriers. Now it's more modular. Now with fronting carriers and collateralized reinsurance and reinsurance and data being accessible, technology being cheaper, people are able to do all things at once. These aren't just modules now. I'm going to grab a wholesale book of business and I'm going to create a program and I'm going to get reinsurance for it. So we're helping people do that. I'm going to give a quick example. This is a new one. We had a foreign-based InsurTech MGA. They did loss control and loss adjusting for trucks. And that was one piece of their business. And the other piece was an MGA, and they wanted to be in the United States. Can you help us buy an MGA so we have the licenses and all? At the same time, I'm pitching a carrier. And I said, what do you do with your 50-state licensed MGA platform? He said, nothing. I wish I could do something with it. So we introduced those two. It was like the Reese's peanut butter commercial where the guy with the chocolate is walking down the hallway and bumps into the guy with the peanut butter. So we put those two together and we'll get paid in between. And maybe that'll become a capital raise or M&A transaction. So I think that's it. I think I got everything.
No, that's it. I didn't realize all of the mechanisms you had going.
Yeah, we're all over it, you know. Yeah.
Yeah.
Everything. We love insurance. So it's no
fantastic.
accident that all 3 of my boys are in the insurance industry. My oldest is a superstar broker at Marsh. He does real estate stuff. Middle one sells group benefits at Hub, and the youngest works for us. Jen says, you could talk about insurance for 20 minutes at dinner. That's it. You got to cut it off after that. So
Right.
we love it. Everybody loves it in my family.
Put a sock in your mouth, right?
Yeah.
So back to, let's go into the M&A piece just for a minute. And I would might want to dive into some more of those other services. I think a lot of agencies, look to start programs, things like that. Because I even get calls about it, from what I did at Insurance Solutions and in the book and everything, how I went through it. So as far as the investment banker, kind of go through, working with you, obviously your connections in the industry you just described, but like versus, let's say, a business broker and or working directly with an aggregator who's trying to buy them or roll them up. Like, what's the role that you can play there versus that?
Yeah. So we've been called business brokers. We've been called that. And as an investment banker, I don't have a bank or I don't invest in anything. So, so what you call me isn't as important as what we do for agencies. And that's the biggest part of our business. And we know the marketplace. All right, we know all the buyers. But believe it or not, a property and casualty retail agency, very sophisticated. They know their value. They know who they want to sell to and who they don't want to sell to. So knowing the buyers isn't the most important thing. Everybody knows them. So if it was just as easy as that, introducing an agent to a potential buyer, I think anyone could do it. The value add in between is preparing the agency for sale, packaging them up, going to the buyer, identifying the buyers that will work, where they belong, and running a process. And I'll talk about that process. It's important because it is time consuming. You mentioned towards the end of your deal how hairy it got. That's every deal. If by the end of every deal, we tend to step in the role of psychologists and say, listen, and I've done this, I can curse, right? You said I can curse.
Of course, yeah.
Because now I'm in New York. I had a client call, if I tell you how many times a client calls and says, I can't do this. I don't want to do this. I want to get back to work. I want to get back to my business, and I said, this is fine. Bruce, because this is a true story. If you don't like this deal, I don't want you to do this. I have enough deals. I'll do your deal next year. But if you're tired, you're going to suck it the fuck up and we're going to get this deal done. I go, I'm not letting you blow it because of this. So there was one time, it was Bruce who called me up the day before the deal. NFP was buying. And he said, I'm so tired of this. They're assholes. I'm not selling to them. I don't even want to work with them. They've been asking the same question over and over. It's the day before, and they're asking for this information again. And he's screaming at me. And I said, Bruce, let me explain what's happening. All right. They're great buyers and they're great people. And everybody is crossing the T's and dotting the I's and asking for that. You're right. They did ask for some of this before. And we'll point it to them and we'll take a deep breath and do that. And some of it's just cleaning up. So you see what's happening here. And he took a deep breath and he said, I get it, but will you do me a favor? I'm not done screaming. Can I scream at you more? And I said, enjoy, So that's what happens at the end of the deal. But the process in between of taking an agency and preparing it for the sale, if they haven't already, and a lot haven't. And I'll pause there for a second. As I speak about what we do on the due diligence side, I should say that we've used that, and I would recommend, and my competitors have due diligence arms as well, use that. Use a banker has that because they get to know how to prepare someone for a sale and what buyers are looking for from a due diligence perspective. But we will put our due diligence people in there just to get them ready for what they're about to be asked because it's not easy. Now, if everybody took my advice, agency owners took my advice beforehand, they would start that 2 or 3 years before they sell, as long as they can. Act as an institution that's about to be sold before you have to do it.
Get very organized and prepared. Yeah.
Yeah.
Like as agency owners, you're running the ops and doing sales, you're doing everything. And so thinking about tightening up the back office on data and financials, it's an afterthought, right? Yeah.
Yep. I get it. We did a retail agency that was a specialist in nursing homes, sold it to Hub. Hub is funny. A lot of big buyers are funny. They want internal controls, financial reporting, and this company, they were salesmen and probably the best at it, but they were not back office people. Kieran, my partner, and I went in with Catherine Derenberg, hers, and we've cleaned them up. We organized their back office. Literally, we went to them and said, okay, raise your hand if you pay the bills. And two women raised their hand. I go, go stand over there, your accounts payable. And we flow charted out an accounting system, gave people roles, put them in the right order, got them ready, and sold them to Hub at a premium. And they would not have gotten that deal done without that, and they would have not gotten the price without that. So that's the beginning of the process. Then there's valuation. And a lot of times, agency owners will come to us and say, here's what I think I'm worth. And we say, well, you're not. I mean, you're not going to get that. If that's the case, if we can't manage that expectation and say, okay, here's the valuation and here's the structure of your deal, is that what you're looking for? If it's not, we'll say, let's not do it now. Wait. Or if you're growing too fast, well, let's try and capture that in the structure of a deal. But we'll do that for you, which is another part. And the next step. Now that I know what you want to do and how much you think you're worth, and we come to a reasonable expectation, managing expectations is somewhat what we do. We gather information. And that part too is a challenge because a lot of agency owners, once again, are focused on sales and production and so on. And sometimes the back office isn't reconciled, isn't buttoned up. I'm very critical about agency management systems. A lot of them are set up to make people just do things automatically. You go into a control and say, what do you debit? I'm a former CPA, so I know a debit credit guy. I don't debit anything. I set up the invoice. Well, something's happening, but you just don't know what it is. So getting that information, packaging up, and doing a pro forma analysis, that's a big valuation driver. So now we're in, how do we get the best value for you when we go out and approach buyers? And that is because agencies trade based on pro forma EBITDA. And we can go through a lot of reasons why I can convince a buyer that one agency is really worth a lot more because of the growth, because the end multiple is just a result of a lot more math, a lot more financial math, discounting cash flows and so on, than one would believe. That's what drives that 10 or 11 multiple or more.
And Steve, on that note, what are the range? I know it varies greatly by the size, but give me a range today. And is that now still on the higher side? Has it calmed down a little bit? Because I know there's been a lot of transactions.
Not calming down. Well, in our sector, we're not seeing it. You can argue Gallagher Board of Short Partners, and I think it was a 14 multiple. And experts were saying that's a correction. I don't think it is, first of all. And we're insulated. The agencies that we're doing I see no downward pressure and haven't seen it, even when interest rates rose.
Really?
Yeah, I said, and for agents and brokers, I said, look, if you're going to come in and say your cost of capital has gone up and you can't pay that much, or just get on the end of the line because you're going in the penalty box. There were so many buyers out there still are, that what we did see was the number of buyers that would show up. So instead of 14, 10 showed up, but 10 are enough because 10 realistically become 3 and 3 becomes 1 and 1 closes. So, and that valuation range, I would say a small retail agency, you might see in the 8 to 10 range, 7 to 10, depending on how small. Book of business probably in 7, but agencies with 3 million of revenues, 4 million revenues. Now we're talking about 10 or 11 times, 11 and a half times as they start to get a little bit bigger, right? So 11 and a half times down payment. So Now, look, there.
Is it still like, I know the bigger ones do stock and all that, but what's the normal structure? Is it 50% down or pay
No, more.
100%?
So, and when you say normal, first of all, things have changed. I think the mix between down payment, earnout, and equity has changed over the last 26 years. Where tell you something interesting. I started with USI. It started at Hales. My partner's his living room. Barney Mizell was the first USI founder, and we went to Dillon Reed and raised $50 million. It became their buy-side investment bank at Hales. And I knew, so I've been doing roll-ups and aggregation strategies and acquisition strategies through USI, Hobbs Group, Kinlock, and Amwins was Americana Financial Services before it was Amwins, and have seen this where if you go to a seller and say you're going to get cash, earnout, and stock, the cash part they always focused on. The earnout piece they were intrigued by, the stock they discounted. I will tell you, I don't know how I can prove this to you, but that equity piece is probably the most valuable piece of the deal. So, and over time, now what you'll see is, and if you've seen one, you've probably seen one, but they get similar. I'm going to value your agency at X. You could roll some in equity, and I'll have an earnout piece, some sort of mechanism in there to give you a little bit more upside, or give me as the buyer purchase price protection. If it goes down, I'm going to claw a little back. That could happen. So if an agency is growing very fast, they might want to concentrate on that earnout because that'll capture that growth. And we've done that. There's one company we sold that they were, and still are, it was actually an MGA that sold to a large retail operation. They were event cancellation and prize insurance. And all that network of retail agents really was looking to them as a facility. And because of that, they said, give it, if we plug into you guys, that earnout is so achievable, we want more of that because that's where our real lift in value is. And then the equity portion. I can't remember a time where the price of equity really hasn't been, listen, private equity back most of these, and they're in for a 3 times multiple on invested capital. So it's going to be there some one way or another. And especially in an industry where there are healthy margins, recurring income, despite what Floyd Progressive says, 93% of the people renew their car insurance, right?
Right.
So, and commercial is, they renew it. So you don't start January 1st, from zero, you start at your renewal rate, or your persistency rate. So, so it's a good business to invest in. And I would anytime, buyers don't let us typically buy equity or take equity. It doesn't really align things for them and puts us in a conflicted position, but I would,
Yeah, you see the benefits of that.
Yeah.
Hey everybody, it's Eric. I just want to pop in for a quick announcement. Exciting news. I just launched my new book on Amazon. It's called The Blueprint: An Insurance Agency's Unconventional Rise to the Top. And it goes through a little bit about how I built the agency Insurance Solutions since 2009 to today. And the blueprint in terms of how I actually did it with the tech stack, the offshore, nearshore talent, and digital marketing techniques that I use. So pick up a copy today on Amazon. Thanks, guys. And then, so we were talking more about the prep. You guys assist with that, the valuation as well. And as far as like the helping the client make sure that, the agency owner make sure that the cultural fit will be there. Are you seeing that are many of the folks you're selling to, are they coming back in and just, synergizing everything, cleaning house, everything's going on one agency management system now? a lot of synergy, or do they try to leave things as is based on the agency itself? Like, what's been the norm these days,
But both are really prevalent. And it's but there are agents out there, and we do that most of the time. I can tell you, you know, sometimes we'll go out to those 14 buyers, and there's more. And I said, well, there's no way that they're going to end up over there. Not that that buyer is a bad buyer; they just don't fit. And based on what they're telling me, but what they want, it's not going to fit their location. Where that buyer wants to fold them in and say, "I'll make you part and use our centralized facility and do all these things." And the agency owner says, "Yeah, but all I care about is my people," right? Well, you might be better off selling to these other four who want you to be more independent and standalone. So or just culture, just that personality, chemistry. The highest bid doesn't always win. In fact, it doesn't always win. It's usually that second place where I like that. I like that agency better, and I just don't see myself post deal doing the next 3 years after the deal with that the highest valuation. So we see that a lot. Chemistry is super important. And most of the time when agency owners talk about who their favorite is, it's obvious. They clicked. It worked. That's who's going to win the deal.
So you try to evaluate, listening to your sellers talking about the agency owner and to what their goals are, whether maybe they're going to stay or they're going to leave, they
Yeah.
people have need of more, market, more distribution, markets distribution. So you listen to that and then try to make the match if you can. It's hard,
Yeah.
I assume,
Yeah.
because everybody's personalities, but
Yeah. And you can imagine, right? If you have one buyer who says, I want younger, people and I want people who are into growth and all that, I'll give them the ability to do that. And the agency owner says, I just want to sell and get out. It's just not going to happen. I'll introduce you, but it's just not going to happen. So
are you mostly paid by the seller, by the buyer?
we're mostly paid by the seller. We're mostly sell side. We pay a percentage of our fee. Our firm, we don't take retainers. If I couldn't sell your agency, I don't want to do, I don't want to, I'm not going to make money on a retainer. Um, uh, Maybe my partner's going to kill me for saying that. Maybe we should take retainers sometime. But no, we're not going to do that. We get paid on a success fee. And I don't think there's been a time where someone has said, I know exactly where you earned that or how you did. I will tell you that, and if we go back to process more, Kieran and I, when we started the business, looked at why other specialized investment bankers of our size failed, considering that the guys who started them were great bankers. And partially it was because they came from bigger places where they didn't do all the stuff themselves. And, one guy said to me, I went to Chicago the other day to pitch a deal. And when I got back, the good news was everything was right where I left it. The bad news was everything was right where I left it. So we invested early in an execution team that from the time we onboard a client to the time it ends, the execution team takes over. Pat Derenberger and her team, my youngest son reports to her, take that deal and usher it through the process. There's continuous nature right through, and so much so. Now I have to stay in the deal. I'm on the calls and all that, but at the end, 9 clients out of 10 say, "Oh boy, we couldn't have done this without Kat and our team." I said, "I have an ego too. How about me? I didn't.
You're a figure,
Yeah.
that's all I remember.
So that's important. When we get through that and get through going through due diligence, going through the negotiation between the parties. Once a seller gets a letter of intent, that's a broad letter, no matter how detailed it gets. You try and get as much detail in there, but now converting that into a asset purchase agreement or a stock purchase agreement, the definitive documentation that's going to close this deal is something that we stay very involved in, so much so that lawyers use us to build the schedules. There are a lot of schedules in those agreements that refer. It says, except for these, we have no other liabilities. Well, we do that except for schedule, right? Because we're
Right.
part of the process from the very beginning. We know what the exceptions are, or we know what schedules are supposed to be provided. We help there and help close the deal and make sure it closes smoothly. And because of that, we're a little bit more efficient and successful at closing deals.
Then go back on that equity question, because this always I was wondering how this worked. As far as let's say like Acrisure, they're not publicly traded yet. So let's say you do a deal with Acrisure as an example, and they give you equity and give you stock in Acrisure, but they've not gone public. Like, how does that really, how do you sell that value, that private stock to
Yeah.
get equity out? Is there a structure for that? If they
Yeah,
have
probably three ways. People have liquidity plans where they'll buy back and allow you to sell. If they're private equity backed, private equity, if they're in for 3 or 5 years, hang out and sell to the next private equity firm, right?
Yes. So that's
Or
when you get the transaction to change
yeah,
over,
yep,
is during that the private equity exit.
yeah,
Okay.
yeah, and you exit. And then the last is, well, Acrisure may be a good example. I think they're probably the number one most likely to go public is an IPO, I guess, right? And we've seen that.
Yeah, supposedly they're looking at it, it's hard now,
Yeah, yeah. So
Okay.
everybody has done well on that. I can't, even the ones, some of these aggregation strategies that didn't exactly work out always did well because of the nature of the business. So that recurring, high margin business.
Back on the operation questions of a current agency, now the technology stack has gone up down in price, more SaaS models for the billing, so it's a little easier to get a handle on it. Other than the agency management system, are you recommending that clients get, highly tech oriented now from, digital back office, digital tools, AI running things as much as possible, very integrated where you can. I know there's not one system these days that can, do it
Yep.
all, but, are you seeing better valuations when an agency goes
Yeah.
through all this time to set these things up and get it and operate? Or does the buyer come in and just dismantle everything and put it on their platform? Like, what's the best route?
Yep. So once again, since there are so many buyers and different strategies, you've seen all of that. Some will say, listen, I'm gonna take you and integrate you on my with my technology and my back office and my this and that. But the answer to the first part of your question is tech enabled these days does two things. One is it makes you more efficient. I mean, we're dealing with, just think of the submission process, to rate, quote, bind, issue policies. If you don't get that to be efficient, your EBITDA margin is not going to be as good as if you did. I mean, that's easy. Now, your EBITDA margin is what drives valuation. So you're losing out on that value. And, it's not so hard to quantify what saving that cost is, and what value it provides. But I also think it makes you much more competitive. It may make you faster to make a quote, right? If somebody is putting in a fleet of trucks, one by one VIN numbers and inputting by hand, versus someone who's going out through a technology platform that has an algorithm to grab that data and just populate it right away. And that puts a day edge on somebody, or maybe even more, to get a quote out. That's going to make you much more competitive, So,
Yeah, I see, especially good point about this, that your EBITDA is going to be higher because you're more efficient.
sure.
And then what about is there an appreciation of a buyer of an agency having any kind of offshore, nearshore talent, virtual assistant helping in the background to reduce, cost, or is that not seen as valuable? What's the thought?
Valuable. In fact, that's how it started. I saw one time where an MGA, it wasn't technology, it was offshore, that when a submission came in, it was evaluated first by that offshore person with an email back to the producer to say, I asked you for loss runs. This was an MGA, so loss runs and all this stuff, and you gave me everything but those loss runs. So they were told you give it 2 tries, then it goes to the underwriter instead of the underwriter or his assistant taking that information and doing it. That's not technology. That's just someone else cheaper and understanding the business. And it was a great and this is 10 years ago, right? Now it's technology that's doing that submission process. So yeah, I think, you know, to the extent you can get go offshore, we see people doing it. You know, that sales and service
Helps it. Okay, so
yeah,
they'll either keep it or
yeah.
not keep it, but at least it's helping.
Especially, yeah, especially because they become more specialized. They know the insurance distribution world.
Right. And then what, as far as the advisory team, you know, that the client or the agency owner needs to make sure to have in place in addition to your team, M&A attorney, CPA, like what are your
So we do most of, if CPA less, we do deal with their CPAs, depending on how sophisticated their controller is or CFO, perhaps, you know, we'll deal with the CPAs, but they're compiling numbers, and then they'll come back in when, you know, we don't give tax advice, but we certainly have an opinion, right? They need that person. So yeah, CPA in the beginning, and then probably when the deal's being structured and so on. Lawyers. When people ask me how long is this going to take? Listen, I could do it in 90 days. I could, right? If we get this going and you give me all the information on time and I package it up on time and we go. The one thing that could hold something up is attorneys on either side. And finding the right attorney, someone who's commercial, not, you know, a lot of times we will get a client that says, I have my favorite attorney. You know, he's closed on my house. He's done that. Well, he's not an M&A attorney. And because of that, there are a lot of market provisions in the purchase agreement that are either non-market or outside of market, or, you know, where a non-skilled, experienced attorney, M&A attorney, won't get that. They just don't. So they hold things up and they make things harder and they frustrate all sides. So what we'll do is, if a client says, I need you to recommend an attorney, we'll give them 3 names and say, you pick. I don't want to pick an attorney for you because, you know, but you go talk to these 3 and pick a name.
You don't have M&A and insurance knowledge, so it helps bridges. I know,
yeah,
you know, my person I know that I use, they had some insurance background, but it was more on another side of insurance, nothing to do with like commercial insurance.
right? Yeah,
So you
yeah.
gotta be careful. It really makes a difference because it started
Really makes a
away in my
difference.
transaction, I remember.
Yeah, and you know, some of these attorneys have worked with the large buyers before. I mean, the 3 that we would give have done deals with Gallagher, Hub, you know, InZone. I mean, they Alchemy, right? They know who the attorneys are on the other side. They know what they'll get away with and what they could push back on and where it's going to end up. And I'll tell you something we do too. We have an attorney that we use, and every once in a while, when an attorney goes a little bit off and I want to reality check, what I'll do is, I don't want to have a legal argument or discussion with an attorney. I'm not an attorney. I was on a jury once, but I don't think that counts. I'll go out to my attorney and say, what do you think of this? And I don't give him any information on who the buyer is. He said, I know the buyers now because they do that all the time. And here's what's going to happen to you. All right. So imagine that if an attorney has done business with all the buyers as well, they know where they're going to get to approximately. They know what to expect on the first pass. It makes it a ton easier to do these transactions and a lot less frustrating. But that's the lawyer's most part. We love, I mean, I really don't have anybody I don't like. But we try and do as much as we can for those attorneys, work very closely with them towards the end of the deal. And they're relying on us a lot of times to interpret what was negotiated in the letter of intent and did that language get adequately after they wrote it. So
yeah, and I remember I had on my deal, I had to bring in, I had my a CPA, of course, just handles my tax returns and knew me and
Yeah,
my
yeah,
companies in that way, but they didn't have the expertise of a large firm that I had to use to say this is a good way to structure the deal to do for tax purposes to reduce your
right,
taxes,
right.
from a transaction. So that
Yep,
was something I had to add in. I utilized just the largest local, CPA firm in Atlanta, not one of the huge, firms.
yeah,
And they did a phenomenal job of coming up with things even the buyer, who was much bigger, didn't know or to do.
that's right. That happens. And the earlier you do that, the better. So, and we'll go through this prep with people. I'm thinking of selling 2 years from now. Will you come in and just take a look at us and uh, then tell us that? And then we might say, speak to your CPA about the way you're structured and what you could do now, as opposed to wait for the deal to happen before you start to think about it. But either way, we'll get it done.
Yeah, and it actually created a win-win too. Like I reduced taxes and the buyer actually got to reduce
Yeah,
taxes.
yeah,
They're all
is that
for
good?
it. I had to pay for that advice, but hey, it helped both parties
Yeah,
in that regard. And then, because again, I'm back on because the fact that you're not just a business broker, talk about the capital raising. Like, what are agency owners coming to you for capital for? Is it for, hiring more producers,
yeah.
getting more back office, more tech, more markets? What are they doing with that money, and why would they come to you? How do you
Yeah.
help them with that too?
Well, a lot of times they're coming to buy a partner out. So that could be it, to grow, to handle an operational need that they didn't expect, or found themselves in, a position where they just need to raise capital. The first step, or the first stop, is probably there are a lot of lenders out there who lend specifically to agencies, and they're good at it. It's a low cost loan, easy to get done. The default ratio for those lenders is close to zero. I mean, they know this business, they know how to lend to that entity. That gets you so far. And we do look at people who aren't ready to sell or shouldn't sell yet. They're not there yet. But they need that, to be incubated a little bit longer. So we've met agencies and said, listen, we'll help you along the way. I'll be a quasi, you got a CFO question, call me. I was a CFO twice, right? I'll help you there. I'll help you get to the point where you should sell. And if you need capital, we'll do it in two ways. Um, we will borrow it, or find a strategic investor maybe, or a friendly that we know that'll put capital in. Okay, now that I said we don't invest in agencies, there's an agency that Kieran and I independently did the same thing. They came to us and said, I need to borrow $500,000 in order to buy my partner out by next Friday. Could you raise the capital for me, and could you get it done by Friday? Well, no, because it's too small for us, generally. But I'll tell you what we will do. We'll make that investment. So Kieran and I made the investment in an agency to get it to the point where it will sell. And so we acted as merchant banker. We acted as in a proprietary way to help this agency. We liked them a lot, and we bought into it and did that. So we could find people to do that. More likely, it's going to a bank that specializes in those loans.
Okay, so exhaust that first. What's the normal size of those loans? 2, 3 million?
We've done from $3 to $10 million. We've done from 1 to 10 million at that point, or more, because
That's
it's
a that's a
bigger.
that's a that's a facility that specializes in agencies, right?
Yes.
Okay.
Now, that's to do the normal working capital, growth, and so on. Then you get agencies that come and say, I know we're small, but I want to acquire a few people, and I want to build up before I sell. I want to acquire. Then it may get into bigger, right? And then we've actually raised the next level up of debt to support either alongside private equity, or introduced to private equity that came into an agency, and use them as a platform. If they start to get big enough to be a platform, then they're looking at the private equity more larger lenders who are looking for sponsor deals. So they're looking for private equity, and they'll lend to them or alongside them.
Got it. You know, something that I've seen in agencies do, which is ingenious, is that really they were thinking more, I need capital because I want to grow, I want and organically and do these three different, you know, stages of hiring and producers and back and CSRs and marketing and so
Yep.
on. You know, so I want to be aggressive on that. But then but to get the money, they go ahead and create a team to do acquisitions, you know, as the first piece of that. So to grow, you know, not so organically, you know, outside of the agency.
Yeah.
And that seems to stimulate to get the more investment income because people like that, like you said, that pro forma
Yeah.
that they're going to grow quickly. And you can do that through acquisition. And then by osmosis, because you've got these connections now and getting through the funds and growing through these other agencies, you are adding producers, you're adding back on, you're doing the same thing, you're just doing it a different way. That's
Yep.
more in the appetite of the folks who are lending. Is that a
Yep.
good way to put it?
Yeah, absolutely. And not only that, but agency owners tend to know who's for sale before we do, right? Because it's in their neighborhood or their competitors or their friendly competitors. And they say, listen, if we were together, if you could buy me, or someone's getting older. I mean, we've had sons buy our fathers. So in order to do that, you know, we arranged for capital for them to do that. But yeah, if you could acquire as a smaller agency and get to more you know, larger, look, there's valuation also goes up as size goes up. There's a size premium. So, you know, and if someone you see is retiring and they're going to sell their agency, if you could buy that, that might be a good thing to do.
And that offsets the debt in some cases, I
You
guess.
bet. You bet. And some have done it where they've gotten that arb, where they bought them at certain price and sold the whole thing at a larger multiple. So they even picked up an arbitrage in between. And that's a good thing. So, you know,
P&C agents, have you run into Byberg, which is a Berkshire Hathaway company quoting workers' comp for either your prospects or clients? Well, great news. Insured Solutions, a national MGA, has an appointment that is set up to allow you to quote, bind, and service Byberg at your agency. And the coverage is in all states. It's A-rated. Startups are even accepted. There's $125,000 maximum premium. And some of the tough industries they write are construction, transportation, that includes towing and parcel delivery, manufacturing, security guards that are armed and unarmed, motor mediation, and many more. So go to our website at insuredsolutions.net, click the Get Appointed link. We'll get you logins for you and your team and can set up a webinar for training if you'd like. Also, feel free to email info@insuredsolutions.net and I can handle the submission myself, or call 770-402-5343. Be glad to speak to you and give you more detail. Thanks. So any other kind of kind of winding down, but any other advice you would like to, you know, offer people who are considering selling, you know, how to approach you or others in the industry about it, still keep the confidentiality? I know a lot of agency owners do not put that on the street that they're selling, you know.
Right.
How do you go about it?
Well, I would say the overriding theme is prepare now. I mean, whether you're for sale or not, if you're an agency and the rumor gets out, you're selling, of course that's the case because everybody's calling you. You know, agency owners know who's out there and who's calling them. Guys like me are calling them, and business development people at the large buyers are calling them. So it's common, you know, but we do a good job of keeping it secret, and so do the buyers. I don't think we've well, I shouldn't say that. I don't think we've had a problem with NDAs or anything like that. Things leak, you know, when to tell your employees. That's an integral part of who you tell and when, because you don't want it out there. But we haven't had a problem there. But I would think that the overriding piece of advice is institutionalize it and get ready first. And then when you decide to sell, it'll be so much easier.
Yeah,
You
and
know,
do it in like because of, again, the agency owners are so busy running the business. Do it in small little phases and chunks, right?
yeah,
Over time, that we're going to get this organized with our accounting software or
yeah,
our processes. We're going to get put in writing using an offshore firm to help us document our processes. Or
yeah.
is that the way to go?
Yeah, and we set up where we said every month you're going to produce these reports, put it in this data room under this structure, because when someone does due diligence, that's what they're going to ask for. So it's easier to go grab when you have to do that. And believe it or not, if you're concerned about, people knowing when you're selling, if you have it already set up for the last 3 years, it's not so odd that someone's going to
Yeah.
take a look at that directory.
It's not
So
like the last
yeah.
second you got to get Matilda to go pull these reports
Yeah,
together.
yeah, yeah. So that I'll tell you, the marketplace is great. Valuations are high. I don't see them, I don't see any. I should say, hey, listen, if you don't sell now, you're crazy. But that would only be me being a salesman. So I'll get more business, but that's okay. It's gonna be around here for to stay. I love the business. And I think that it's just. I mean, look, last year was a bad year for agency sales. There was 750 or so last year that sold. Different than your
That's a bad
deal.
year. That's crazy.
Yeah, but it's 750 is enough. We can't do them all,
Yeah,
so
yeah. And then
um,
Steve, how do people get in touch with you? The best way to reach you if they have questions or they make entertain selling or just want to kind of pick a capital raise, they might want to put a program together. Like what's the best way to reach you?
probably going to any upscale bar in Miami or New York City if that's where Stephen.
That's true.
Um, no, I think, look, we're www.tagfingroup.com, or, we're Tag Financial, call us. That most of our business comes from referrals or people calling or looking at our website and saying, do that. We're no pressure. Because I'm going to do the same amount of deals this year as whether you engage us or not. So, there's enough out there for everybody. We are, this is a funny thing. We're number 2 on the league tables for agents and brokers. All right. I like being number 2, less pressure.
Yeah.
The funny thing is, I'm very proud of that, but it's by numbers of deals. So I always brag we're number 2 in the league tables. Soon, we'll probably be 1 soon. But until I brag about it, until I get to number 8, and that's Goldman Sachs. So, size has something to do with it, but we're active in this marketplace and we know exactly what people are going through. I know exactly what they're going to say I know when that phone call is coming at the end of the deal. I know when someone starts talking about working capital, that's going to be a little confusing, the difference between a requirement and actual working capital. So we've been through it. We know the questions that people are going to ask and the issues that are going to come up. So we'll make it easy for them.
That's awesome, man. Well, I appreciate your time and coming on. Again, I hope to see you in Miami soon.
Yeah.
And or New York. I got to get
And
back
or
to
New
New
York.
York. And
Yeah.
yeah, definitely. So thanks
All right,
again
man.
for being on. I appreciate it.
Perfect. We'll see you soon.
Thanks again for tuning in to Insurance Shop Talk. If you enjoyed our deep dive into the latest trends, please don't forget to like, subscribe, and hit the notification bell so you never miss an episode. Until next time, I'm Eric Stein, and this has been Insurance Shop Talk.